right? You got me running. Shake it, raise your hands up, raise them up.
Okay, good morning, everybody. Welcome again to the Forex Trading Asia Daily Currency Call. This is episode 309, the 10th of June, 11 a.m. Singapore GMT +8. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlight potential targets and risks. Yeah, sorry, there's something happening in the office right now.
Okay, wait, what are you laughing about? Let us know. What's the joke, man? Come on, let us know.
Okay, nothing. Just something happened over here. All right, so a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker, so please remember to do your own analysis prior to entering any trades. So first things first. Yesterday, that's the BOC rate statement released yesterday. So we are going to get Kim Hong here, currency analyst and LCMS traders, to share a bit about what happened yesterday. Give us a summary about that. Kim Hong.
Okay, thank you very much. So what happened, Junwei? Hey, don't take off your mic. Anyway, what happened? Share with us what happened. Okay, I guess you'll be sharing with us later on. Never mind. Anyway, on to the serious stuff. Okay, so the Bank of Canada, they actually held monetary policy unchanged yesterday as expected. Okay. Now, however, the central bank actually highlighted that the recent lockdown due to the third wave. Okay. Yes. So the lockdown was on Nova Scotia. Yes, Nova Scotia and what's the other? Yes, what's the other place again? Nova Scotia and okay. Anyway, yeah, the two provinces due to the third wave that are affecting the economic activity. Okay, so it actually has an impact on the economic data release. Like I mentioned yesterday, the jobs report for Canada in May was actually quite not very good. Okay, jobs were lost. So the central bank actually highlighted that point in the statement. Now, but they also mentioned something. Okay, they said that with the speedy vaccination programs going on and the possible easing of restrictions over the summer, the economy is expected to rebound strongly. Okay, now if I'm not wrong, the lifting of the lockdown, okay, is likely going to take place next week, but this is something that is not confirmed yet, okay, according to the Canadian government. All right, so we can see that although nothing has been changed, okay, no further QE talks as of yesterday, okay, the central bank is nonetheless optimistic in the view, okay, in the Canadian economy outlook. Okay, so the next meeting for the BOC will be on 14th of July. Okay, that is probably like 1 month down from today. So we will have to pay attention to that. Okay, because from the previous meeting till the next meeting, it'll be like some close to 3 months kind of duration, which is probably enough for the Bank of Canada to further evaluate whether to take on further tapering of the quantitative easing. Okay, so that is for the Bank of Canada. Now, from one central bank to the next, okay, we'll be hearing from the European Central Bank today at 19:45 GMT +8. Okay, they will be announcing their monetary policy decision. Okay, the central bank is expected to hold policy unchanged as usual. Now, recently, some of the members or many of the members from the European Central Bank, okay, the committee members, they actually expressed this very cautious view on early withdrawal of quantitative easing. Okay, so they actually mentioned that if we were to actually cut down on quantitative easing like right now or do it too early, okay, this may actually undermine economic recovery in the Eurozone. Now, we can actually understand that coming from them because, Eurozone is a zone made up of like, tons of many countries, like 20 over countries. So it's something that they have to be very cautious about. It's not like, one country, like say Bank of Canada or even the Bank of Canada, or maybe like the Bank of England, where it's like made up of just like 4 countries or maybe one country by itself. The Eurozone is made up of 20 over countries, which means that, one wrong step can actually lead to a great impact on the economy as a whole. So which is why the central bank is quite cautious about early withdrawal of quantitative easing. Now, that being said, do we actually have other things to look forward to during the monetary policy meeting later on? Of course there is. Now, if you remember that during the previous meeting in April, the central bank actually mentioned this. Okay, let me share my screen with you. So during the previous monetary policy meeting in April, the European Central Bank actually mentioned this in their statement, all right? The Governing Council expects purchases under the PEPP, okay, the Pandemic Emergency Purchase Program, over the current quarter to continue to be conducted at a significantly higher pace than during the first months of the year. Okay, this means they may actually, in a way, increase QE, okay? Increasing the pace means they'll be buying more at a fixed period of time, okay? Now, this was what took place in April. However, okay, since the meeting in April, we have seen economic data, Eurozone economic data releases to be strong, okay? They actually show strong economic rebound. Now, on top of that, COVID cases fell from more than 100,000 cases a day to less than 50,000 cases a day in the past few days, okay? So with a strong economic rebound and a strong decline in the number of COVID cases in the Eurozone, will we be seeing, this statement again, this sentence again in the upcoming monetary policy rate statement? That's something that we have to pay attention to. Now, in a scenario whereby this statement, is somehow revised to something that is less, I would say, less intense, meaning, instead of saying that we are expecting QE to be conducted at a significantly higher pace in the upcoming months, okay, maybe they will say something like, I don't know, it is actually forward guidance. I can't really make up something right now for this, the revision of this sentence. But if we actually see something less intense than this statement over here, then this may actually be a hint, let this be a hint into what the ECB is thinking at the moment in terms of QE tapering. Yes, they are going to play very safe in terms of QE tapering, but if they are not going to increase QE pace, okay, for the upcoming months, then this is actually a good thing to look forward to. It's actually a slight hawkishness, I would say. So pay attention to the rate statement that will be released, okay? And I will update you guys again tomorrow on whether there's a change or not, okay? Now, also take note that there is a press conference at 20:30 GMT +8. So during this period of time, there may be volatility in euro. So traders out there, just be careful, take note of this. Okay, now, before I hand the time back to Junwei, there's another thing I would like to bring your attention to, all right? So yesterday, we actually see this headline, European Commission VP Sefcovic said that our patience is wearing thin with the UK. We do not want retaliation to happen. So what is all these things about, okay? It's actually Brexit, okay? So as much as the United Kingdom has left the European Union in 4th of January, I would say, it's not over yet entirely, all right? It's not entirely over yet. Now, as we know that the country, okay, Northern Ireland, the country Ireland is divided into 2 parts, the Northern Ireland and the Republic of Ireland. Now, the Northern Ireland belongs to the UK, while the Republic of Ireland is actually a member of the European Union, okay? Now, so now that the UK is off from the European Union, there will be differences in terms of their custom checks and things like that, right? So there was actually an issue on setting up a border between Northern Ireland and the Republic of Ireland in order to facilitate custom checks of goods, goods traveling from the UK into the European Union, all right? Now, however, there was a lot of drama going on, saying that we do not want it to be, we do not want a border to be in between Northern Ireland and Republic of Ireland, because both of them are, after all, Ireland, a country, right? It's just that we are divided and owned by different, we are now under the jurisdiction of different countries, different places, okay? So what they actually impose is that, a border check, okay, will be set up between Northern Ireland and the other parts of the UK, okay? Meaning the Scotland, Wales, and what's the other place again? Scotland, Wales, and London, yes. So goods traveling from these three countries into Northern Ireland would have to go through a custom check before going straight to the European Union, which is the single market, all right? Now, so the UK is supposed to be setting up this whole, making arrangement for all this whole border check to take place in Northern Ireland, okay? However, up to now, they have not done so, okay? And this is actually, in a way, annoying the European Union, all right? So, which is why yesterday, the European Commission actually came out and, give a, I would say, a warning to the UK, in a scenario whereby, they do not set up this whole border check soon enough, then they may actually take retaliation, okay? They may actually take retaliative actions against the UK. Now, this actually led to weakening, a slight, I wouldn't say a slight, I would say some weakening in the British pound, okay? So if you are trading the British pound now, or, the next few days, yeah, take note of this. There may be more issues unfolding in this whole Brexit thing that's going on, okay? And yeah, come back to the call and I will update you guys if there's anything, that you guys have to take note. All right, so with that, I'll pass it back to Jinwei.
Hey, thanks so much, Kim Hong, for the very comprehensive analysis on the rate statements. All right, so I'm going to get Scott here, Scott Andrews from Forex Briefcase Australia, to share about the dollar index. Scott.
All right. Hi, everyone, and thanks for joining us again as well. So the US index was a little bit wild. I would use that term. Last night we saw it sort of break down, and then it actually tested 89.80. So it'd been holding the support at 90 flat for, yesterday pretty nicely, and it did start to break down. And that really saw some quite volatile movements, quite quickly in the major currency pairs, the Aussie dollar, Euro, US dollar as well. So, and then we saw it immediately move a little bit higher as well. And those are the things you want to pay attention to with risk management. So if you've got a trade that you have on, and these things can happen, and it's obviously frustrating, but what I'm seeing now is, so obviously we've got the core CPI data coming out tonight, and I've got this big tick here. So what I want to talk about is, in the lead up to the data, just pay attention to the downside that could happen again on the US dollar. And I talk about this simply from the standpoint that obviously a lot of people anticipate that this is going to, intraday, especially tonight, will likely push the US dollar higher. Now, will it be able to hold above this line up here, which is 90.5, which is recent resistance? And that's, unknown, to be honest. And what I mentioned as well in the trading floor chat in EchoFin with LCMS was that I'd like to see how the daily candle closed. So I've got the 1 hour chart up here now with Samtrade, and that's really what I'd like to see to get a bit of an understanding at how the market absorbs the data that's released. What I've been looking through is what has been happening on the ground in the US in regards to pricing. And obviously raw material has gone up with, a myriad of issues with supply constraints and things. And I saw Campbell's soup was actually down 7% pre-market last night, and they're going to have to pass on some prices to the consumer. Now, I know this is an isolated case as well, but you see a few more snippets of this as well. Like if you follow Bloomberg and things like that on Twitter, it can be a handy resource to just absorb, what's going on in the US from a consumer level and potentially, get some information before the big data sources released as well. And it's just indicating that it looks like consumers might have to deal with some slightly higher prices just due to these constraints that are being passed on from a producer standpoint. So these food manufacturers are going to have to just raise prices because things are, hard to get hands on. So, but for tonight, what I'm looking for, we've got some artwork here as well. I'm gonna press on those. So we've got downside potential.
Scott, unshare your screen. I think we got some people doing some weird stuff in here.
So I just want to finish. So guys, pay attention to the data that comes out, and the number is obviously going to have to be quite high. But if the number is not as dramatic, and Jin wrote a really good article about what we saw with last week's NFP as well. And there's a lot more capacity in the US as well. So from a more longer term standpoint, I would say that the US dollar is going to be really hard strung to actually, break above, 92, 91. So I think for tonight, guys, stay cautious. And if you want to get eager and enter before, please be careful and understand that, like I had drawn, we could really see a quick dip below 90, flat support, and then shoot up. So just stay cautious, guys, and wait for the numbers to come out before, getting in immediately.
Okay, thanks for that, Scott. And sorry to everybody else for that disturbance there. I think we have kicked him out already. Yeah, so right now I'm going to get Jin here, to share about the currency focus today, which is yen and gold. This is Thursday, so it's the yen and gold. So Jin, I can pass the time to you for the yen and gold analysis.
What a weird Thursday it has been. First, we have Jinwei in a laughing fit, and then we have Kim Hong forgetting territories in Canada and in the UK. And then we have people coming in, hacking onto the chats and onto screen shares. What's happening? What's happening on Zoom today? But I can tell you that what's happening on Zoom is not happening in the markets at this point. Despite the US dollar having that relatively significant drop and then the bounce back up, we have seen that move being applied in the currencies, but no real direction from that point onwards. What I mean by that is, I'm going to share my screen now. I hope no one starts drawing on it. Let me just turn off annotations. How do I do that? I used to do that. Okay. All right. So here, looking at the US yen on the H4 time frame, we saw that big move, but you can see that it hasn't really changed the position of the way the US yen has moved. It's really still sitting at that 109.54 level. And this is actually something to take note of. Despite that US dollar index bouncing around, we haven't seen any true direction come out of that volatility. So now paying attention to the news and what could move prices further at this point. Forex Trading Asia, looking at the economic calendar here on Thursday today, there are going to be some news. Kim Hong has told you about the ECB rate decision that's going to be releasing 7:45 GMT plus 8. The next thing to pay attention to is the CPI numbers to be released. Core CPI looking to go from 0.9 to 0.4% on a month-to-month basis, and CPI number expecting to go from 0.8 to a 0.4% on a month-to-month basis. So if that number does drop from that 0.9 to 0.4, from 0.8 to 0.4, then we're possibly going to see continual or resumption in the US dollar weakness being applied pretty much across the board. From that point onwards, from the CPI numbers onwards, tomorrow being Friday, we have not a lot of news that could move prices, but at the end of the week, you might see some profit taking, some accounts being, positions being reset. So possibly a bit more volatility at that point. But you can see that there's not really a lot of economic drivers to push prices for the yen or for the dollar in any particular strong direction. So coming back to the charts, this actually make it look a little bit less exciting. Why I say that is because the US yen on the H4 time frame, what could likely happen is that it's going to sit there or possibly move back up a little bit before getting resisted at that 109.80 level, anticipating the US dollar weakness to come around because of the CPI numbers. We could see the US yen drop back down again. At this point, what you should be looking for is that selling opportunity, maybe from about, if it rejects that resistance, 109.60, 109.60, you have a 25 pip, 30 pip stop loss for a good 80 to 90 pip take profit level. Yeah, again here looking at a 1:3 risk reward ratio towards the downside for the US yen. But in this case, pay particular attention for it or wait for it to reject that resistance and turn down before looking for that selling opportunity. Following from that, the euro yen. Look at the way the euro yen has been going. I'll zoom out one so it's a bit easier to see. That climb upwards has been happening since March, right? Since March, it's been moving upwards, hit that 134 resistance level and has since struggled to break above that point. Right here at 133.29 or 133.30, I think that we could be waiting for the euro yen to drop lower, possibly being dragged down similar to the US yen. Because of the US yen, the euro yen could be dragged lower. But then as it hits that 132.97 level, I think that we could actually see, maybe break a little bit, we could actually see the euro yen bounce back up. Why I think that it could bounce back up is also because of the euro dollar here. Looking at our analysis from the euro dollar, it could influence, or is most likely going to influence the euro yen, with the anticipation that we might hear some good news coming from the eurozone. We said that it was likely to come down towards 1.2145 before bouncing back up. If that does bounce back up, then this could actually drag the euro yen back up off that 132.96 support level. And then lucky last, looking at the pound yen on the H4 time frame, I'm not too keen on any particular trade for the pound yen because it hasn't really done that much. Similar to what actually happened for the pound dollar. Pound dollar has been, as we spoke about yesterday, sitting at that 1.4150 level. Same with pound yen, it's really been at about that 155.26 level. So what I think could happen here is that we're going to see it trade within this 154.62 and 155.26 range before any particular breakouts could happen. So probably pay a bit less attention to the pound yen at this point. Before we move further on to gold, what I want to get to look at is also the euro pound. We did our analysis on the euro dollar, the pound dollar. The euro pound has actually moved quite nicely as per discussed, saying that it was going to sit across. I'll zoom in a little bit. It's going to sit across before possibly bouncing, shooting upwards towards the 86.37 level, and it's done exactly that. So at this point now, if you haven't got into that trade, it's a bit too late to try and trade it back up towards that level. Wait it out. We've already seen the analysis on the euro dollar and the pound dollar, so a bit too late on the euro pound at this point. And then the New Zealand dollar on the H4 time frame, that rejection, you can see here that rejection of that 7225 resistance level has led it down towards a 7167 support level. So I hope you did get into that trade on the New Zealand dollar when we looked at it on Monday, because that would have been quite a nice trade there. All right. Now, for the last one, we look at the gold. Gold, previously when we spoke about it, I was saying that it might actually come and hit that one, the 1954 resistance level. It went halfway before tracking back down again. At this point, with the way Treasury yields are going, with the way the US dollar is possibly going to get some further weakness come around, I think that we could actually see gold probably consolidate a little bit at this point before tracking up again towards the 1954 level. So for gold, hold off at this point because it hasn't really turned, but wait for it to consolidate, wait for it to show a direction towards the upside before looking for buying opportunities. So gold, again, as a reminder, look for buying opportunities, look for the longer term. I don't take on gold as an approach to trade, but more for that longer term position kind of approach.
Okay, thanks for that, Jin. Yeah, so just a reminder again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so I'm going to get Daniel here, Daniel Chong from LCMS Traders. I understand that yesterday you at LCMS Traders, you guys went through a webinar session, coaching sessions. So maybe you would like to share more about that, Daniel?
Yes, Junwei, indeed, we had a trading, live trading sessions yesterday, and we were looking at the charts for 1 hour, looking at the calendar, what has happened, what's going to happen, and straight away offhand, we already based on the 5 steps analysis where we learned in LCMS Traders and practice it as well. Canadian news is going to come in at 10 o'clock, so we purposely avoided most of the Canadian pairs at that point in time and looked the rest of the market. Now, as we look at the rest of the market, looking at possible US market going to open, looking at possible trades to happen. However, you could see that last night the charts was all consolidation, just moving across, not really moving much, Taker. So straight away, at a point in time, sometimes you can't just look at open the charts and hope to trade. We have to be patient and look at it. And instead of just taking a trade, we could have some preparation as well. We look through all the charts, what kind of trade we could be doing based on the previous news and the coming news. And then we decided that, hey, looking at it, hey, the Swiss pairs were pretty interesting at that point of time. So we actually monitor the Swiss pairs trading. Okay, and we will look at it and say, hey, instead the cross pairs were quite interesting. We straight away look at Canadian Swiss. We said hold off until after 10 o'clock. If it breaks below certain levels like 0.7395 after the news, we could look for a down trend coming in. We do a preparations coming in. We also look at the Euro Swiss, and this did very well because at that point in time the consolidation was at the support zone coming in. We were looking for a possible sell break below 109 1.0910, and then going for 20 pips stop loss, 40 pips take profit, and it is moving in that direction right now. And then of course the Swiss yen, we wanted to break above that level, but it's looks pretty high the most likely unable to break. So looking at all three, we have to look at the preparation and then which pairs we'll be looking at. We will not be doing all Swiss pairs coming in. However, we just choose one for proper risk management. And we had a lot of discussions yesterday as well. Like if it's the news coming in, because Canadian news was coming in and it was saying like, if there's a big move outside Bollinger Band, what should we do? What should we not do? And we have a very good discussions on that as well. So I really encourage everybody, those who are already in the LCMS Traders Club, continue to join us, formed in the community of live trading. Monday we have the group coaching sessions. Wednesday we have live trading. Live tradings we trade together. And also do come and join us, continuously join us. Really very exciting and great, very beneficial for all the members. And those who are not already in the club, join us. So the link will both be pasted on the chat group. Join us at www.lcms.com.sg. It is very beneficial for those who are trading in the Forex market. So just join us then. Okay, yeah, Chinwei.
Hey, thank you, Daniel. All right, so we have come to the end of the session. We will see you guys tomorrow for the Canadian and cryptocurrencies. Thank you so much. Bye.